Hi, my name is Moira Tran from Top Shelf Models, and today we'll be talking about equity markets. So we're going to talk about what they are, kind of a definition, get into that. And then later we'll be talking about common investors, targeted returns, and then key investment drivers that you should look into, as well as real estate equity markets. So let's go ahead and get started. Equity markets, which are also commonly referred to as a stock market, is a market in which shares of companies are issued, bought, and sold. So equity markets facilitate the exchange of shares between both institutional and individual investors. It can also be executed through multiple exchange platforms. For publicly traded companies, the most common exchange platforms are the New York Stock Exchange, NASDAQ, Tokyo Stock Exchange, Shanghai Stock Exchange, as well as the Euronext Europe. In these markets, sellers set ask prices for the shares and buyers bid for such shares. When these two numbers are the same, the trade is approved and a sale occurs. These exchanges are some of the largest equity markets in the world, and they facilitate thousands of trades per day. For private companies that issue stock to employees, the stock can be traded through an over-the-counter or an OTC market. An OTC market is a market in which shares, commodities, or currencies are directly exchanged between two parties. So now we'll go ahead and talk about some common investors. Investors in equity markets can vary greatly. So sometimes you have institutional investors, and these are organizations that invest money on behalf of clients. Typically, they buy and sell large blocks of equities at a time. Examples of an institutional investor would be a hedge fund, mutual funds, endowments, etc. We've also got individual investors, and individual investors are non-professional investors who buy and sell equities through brokerage firms or some sort of other investment accounts. Unless they have a large amount of liquid capital, these investors do not take up the size of positions that institutional investors do. So we also have targeted returns, and a targeted return is a method of pricing a business based on the return the investor wants, or quote-unquote targets. Targeted returns calculate the price of potential investment by using the capital originally invested and the return or the profit the investor wants, all while incorporating the time period. The investor wants the return, and then you put it all into a calculation. So it can be really helpful to have an idea in your head of the return you want as an investor. However, one must be sure that their targeted return is feasible, and otherwise the dollar figured return for the price will be unreasonable. When valuing a company for potential investment, you want to be sure that the company is healthy. So a quick way to do so is using common ratios to analyze whether you are over or under paying for the company. There are 4 major ratio categories. The first one is profitability. We have liquidity, debt, and operational efficiency. Each category has multiple ratios that can take financial data from the company and calculate ratios from them. Looking at the specific price of a stock in an equity market, some of the most common ratios for price analysis are price over earnings, or you could put price over book value, price over earnings growth, or price over the cash flow. So real estate equity markets. When deciding whether to invest in real estate, there are more than just financial factors that one must examine. Some of the more common factors to consider when investing in properties are, for example, you need to consider population growth. We should also be considering the unemployment rate, economic strength of the area, supply and demand of the area, the demographics of the area, as well as, surrounding infrastructure and vacancy rates. Depending on the industry and the type of property, some factors can be more important than the others. For instance, a hotel or some sort of retail location is more concerned with economic strength and population of the area rather than maybe a senior living development area. So that is all I've got today on equity markets. If you have any questions, please feel free to reach out, email. Go ahead and check out our other videos that are also listed online, and have a great day.